in that range. They don't break out too much. If they do, it's trending. It's not really the style of trading that we trade. We're looking for consolidating, resting, churning, and then we're taking advantage by using the other indicators, the other tools to guess the probability by all these tools to figure the probability more than guess which way is the price about to go. So the other thing that the intraday reactions will have on it is the pre-market low, center, and high. And these are reaction zones you're going to want to watch, and they're going to be marking the quarter, half, and whole of ATRs based on close of the previous day over a 14-day smoothed out period. So we'll go over that more in the strategy. And then the multi-chart consensus I talked to you about, it's also on this chart. See how they're going up in vertical lines? So this is basically going to warn you when you're getting close that other people trading in larger time frames are about to make a reaction, make a trade, and that could affect what you're doing on your 1 minute chart. So keep that in mind. Finally, down here, the whole and half dollar levels, psychological levels, whether it be $5, $10, $100, $500 levels, but definitely $1.50 levels. Expect some type of reaction. You want to trade with the crowd. I also have an overlay Python indicator here that I use that helps me count down the 1 minute, so I'm not like looking up here. And I do have a clock. I know this is free over at the $1 Million Margin Club as well, so you might want to check them out. They have all these indicators. This entire layout with all these indicators is one link. You can get it all in one if you want, along with the scanners come with it. So I have a link to that, or I have a link to each individual along with a lot of other ones that you might want to try. Maybe you only want a couple of these, but I highly recommend you just get the whole package, and it helps me, of course, but also then you have every advantage to trade along with me. Let's talk about the strategy, then we're going to get into the intelligence report. So we're trading a large cap range bound strategy. What does that mean? The stock is going to have a ceiling and a floor, a high range and a low range. High range and a low range. That's my special effects for you guys. So large caps and mega caps, they just lumber along. They don't make big moves for the most part. They just lumber along within their average true range. So when you get into a trade, most likely throughout the minutes, hours, or the day, the price action will come back to wherever you were if you didn't get out of your trade. Most likely, not always, but it just lumbers along between the ceiling and the floor. Now, if it has a catalyst or news, it might break out, and we have to look at it differently, that it's actually trending in a certain direction. But some of the ATR levels are ridiculously big that we look at, like MU, which is an expensive stock, it's got a $72 range. Well, we don't want to hold it for $72, right? Because you're trying to set your share size in a way where you can traverse the range if you had to. So now we got to tighten the range, right? So the next thing the strategy does is tighten that range by quarter and half ATR levels. Where is the price action moving within that range, right? Let's just zoom this. This is a half ATR. This is a quarter ATR of the highs, and that's a quarter low and a quarter half. And if I were to, there is the top of the ATR, and there's the bottom of the ATR. The most respected level seems to be, from historical data, is the half ATR. Now, this was all put out in a book, Day Trading Volume 1. I have a link to that I recommend you get. It's the first book that came out with a large cap strategy. It's still the book that everybody uses today, even though it's an older book. It's really got all the key info that you need. But now we're going to talk about the pivot and the ceiling and the floor and pivot levels too, which is put out by the Trade Desk report, and I've just adjusted them all. So I'll read those out to you. So those are going to help us with our ceilings and floors too. But we have the ATR levels that help us. And if we go to the previous day, these are the pre-market low, center, and high. So when the day started out yesterday, those were probably fairly handy reaction zones, and then they just blew through it. This is Friday, on Friday. So then what did we go to? Well, it went to the ATR half, and it just lived along there, right? Now you've got whole and half dollar. You had a tweezer move right here. Is that about at the 510, 511? So that's a $10 range you probably would have marked. So we're looking for reaction zones in this strategy where we can help predict which way the stock's about to go. It's about to come to a ceiling or about to come to a floor. And we're going to try to trade those. So we're tightening that ceiling and floor. We're making channels. And then we're using the other indicators to call short-term trades in those channels. It's really the most conservative way to trade. If you think, you might say it's an oxymoron if you're trading on a 1-minute candle, but if you're scalping, it's very, very safe because it doesn't matter what happens around you in the market if you're just watching that data in the moment, because you're out of your trades. You know, every trade you take, you're out of within seconds or certainly within minutes. So it doesn't matter if there's a big news. You're just going to be out and you're going to be protecting